We are very excited to share with you our half-year results, operational results, financial results, and to give you a journey into where we are going in the future. Some of those things that don't change, which are kind of our DNA as Zambia Sugar, is our vision to start off with. We want to be a safe, healthy, and respectful workplace. We believe that that is the foundation upon which value and serving our customers is built on. Most of you who have visited our estate, Nakambala estate. We are very privileged to live on a large estate, which we want to make very beautiful. So part of our vision is really to make that estate beautiful. And as a company, we want to become a diversified agribusiness, which is the best at serving its customers. So if we close our eyes and we open them 5 years or more from now, these are some of the elements that we are going to see about Zambia Sugar as a company. We take the responsibility to make something that is safe very seriously, because you never have to think about putting sugar in your tea that it might harm your child, or when you take a spoon and give your child some porridge or wheat bix or whatever, and you've put Zambia Sugar into that food, you will be sure that we've done a great job to make sure that it's safe. And the last part is that how do we do that is we harness people's talents, natural resources, technology, processes, and systems to be able to do that. When you visit our plant, you'll see all these elements that enable us to serve our customers and to create value. So we are here to see how well we've done in the first half of 2024. So I will start by just giving you some highlights of some of our accomplishments, the underlying things or big things that have actually delivered the results that you will see this morning. When sugar production goes up more than the cane supply, it's an indication of efficiencies. Otherwise, you would have a linear relationship. The fact that we are making more sugar from only an 8% increase in cane supply means we are doing so efficiently. The processing is much more efficient. We have a very strong sales team led by Chembe Kabantama here, and they have been out in the market, knocking the doors, connecting with our customers. And as a result, we have registered a robust 18% growth in sales. Revenue has gone up by 39% as a result of that sales growth. And then, obviously, profit follows all those things. If they were all pointing down, I think I would be not as energetic as I am talking to you right now. So profit is up 105%. I think we deserve a big round of applause.
Good morning, everyone, and welcome to another episode of the Financial Insight Show. This is Mwelwa, your host, and I am standing here with the CEO, Managing Director of Zambia Sugar, at the tail end of what has been a very interesting morning at Sarova Hotel right here in Lusaka, Zambia. Zambia Sugar this morning presented its half-year performance, and without a doubt, Oswald, that's been a phenomenal performance. But tell us a bit about what inspired the half-year performance this time around.
Thank you for having me. In terms of some of the major drivers, they are in the fundamentals of our business. Firstly, we had an 8% increase in cane supply or cane production. And we worked very efficiently to convert that additional cane into sugar, which resulted in a 14% increase in sugar production. Our sales and marketing teams were very active in the markets, and we managed to sell 18% more into the domestic market. We also had a very strong performance in the export market in terms of the export proceeds realizations as a result of the weakening of the kwacha and the higher prices in the world market that are prevailing at the moment. So all these underlying factors, which really are to do with how well we are executing our operations, were responsible for another strong performance. And all this, as you saw in the morning, translated into a doubling of our profit, which was an increase of 105%.
Absolutely. Now, Oswald, obviously this is year 3, and one of the things that we've witnessed at Financial Insight is how you have executed your strategy consistently. Despite the various headwinds that you mentioned this morning, we had energy being one of them, the drought being another. How is it possible that your team is able to maintain, and what are you putting in place to ensure that you continue to be consistent in implementing your strategy?
So I think what you see is the benefit of a strong and consistent strategy and focused execution, because you are always operating in a challenging, dynamic, volatile environment. But the fact that we have areas that we consistently focus on, such as having a sustainable cane supply, being sustainably low cost, operational excellence, and maintaining a close focus on our customers. These help us to continue to deliver despite the headwinds that we continue to face.
Absolutely. Now, one of the areas that you touched on was on the electricity issue. And obviously you did sign the power purchase agreement with ZESCO, but then you automatically went into a drought. You mentioned some initiatives that you'll be putting in place to obviously try and hedge that. Are you able to tell us about that?
Yeah, so obviously we appreciate the natural disaster that has hit the country, and we expected this negative impact because we do know that most of our power comes from hydro, and when droughts come, we are not able to produce as much power as possible. So we are very pleased that we entered into this power supply agreement with ZESCO, but unfortunately climate risks are always in the air, and I'm pleased to say that we do have some mitigation measures. ZESCO has assured us that they will be able to continue to supply us about 50% of our power requirement, and we have advanced plans to import the balance from the Southern African power pool. So we believe that we will still be able to meet our production objectives from a power supply perspective. There's always the risk that will we run out of water towards the end of the dry season. I think that's an emerging risk, but I think the investments that we've made in more efficient irrigation systems will come in handy to deal with this particular drought and mitigate the impact that it will have on our cane production.
And just to touch on that innovation, the company is making quite a huge investment around technology and innovation. How important will that be to future success and sustaining the sort of trajectory that you've been on in terms of performance?
It really goes without saying that the climate change risks are here to stay, and we have to be proactive and dynamic to invest in improving our resilience to these climatic risks. And we see the investment in more efficient technologies as one strategy, but we are also deploying other technologies such as drones, which help us to be able to really focus limited resources on areas that you need the most. Typically you would irrigate all fields because there was no way of knowing which fields particularly need to be irrigated.
Correct.
But now using drones and infrared technology, we're actually able to see the areas that are stressed and then target limited water into those areas. That way we are able to mitigate the impacts of droughts and water shortages in the future, and that's really making us more climate resilient.
Absolutely. Now, with implementation of technology, you did mention that one of the focus areas is obviously creating a Zambia Sugar, which is a nice place to work in. Looking at you at year 3, you are happier than ever, though you did say that your hair is reducing. But will that technology implementation impact the job count at Zambia Sugar? And how are you going to ensure that you protect jobs?
Yeah, so we are really continuing to protect jobs because as we invest in, for example, we will now need drone pilots, which we didn't need before. So these are skilled jobs that we are now creating as a result of investing in technology. The jobs that are associated with production of cane, as it has been always, they will continue to be there. But we actually see some of these technology interventions bringing in more skilled and more fulfilling jobs for people in the future.
And on the supplier side, the companies that provide services for you, do you see more growth? Because as the business continues to grow, that means that there's more opportunities for the local community to participate.
Yeah, so as the company grows, we procure more materials. We are buying drip irrigation equipment, for example. We are buying drones. And all these additional materials that we buy as we expand create a multiplier effect into the economy, and we also have significant plans to continue to support the communities in which we operate, and you can watch this space in terms of some of the plans that we have.
Absolutely. And then on a final note, on the ESG issue, we did have a side conversation around that. Do you have any comment on that? Despite all the headwinds, are you meeting or ticking all the boxes around your ESG commitments?
Yes, we are. Starting with the cane production side of the business, our investments in water efficient technologies mean that we will abstract less water from river systems. So that's the E part of the ESG. We also have a new farming system that we are implementing at Zambia Sugar, which will make our cane production to be much more sustainable. Before we replant cane, we start by planting a cover crop called sun hemp. What this does is that it retains organic matter back to the soil and protects our ability to produce on our soils for many years to come. In terms of what we are doing in the factory, we are continuing to work to reduce emissions. Our process is very clean because we don't burn any coal or fossil fuels in our production. We use bagasse, which is a biomass feedstock, which is carbon neutral. But we are continuing to invest in technologies that just continue to make us cleaner. I did share our evaporator project during the session. Those are some of the investments that we are making. We have significant investments as well to reduce energy consumption in our factory, and all those contribute to our E commitments. In terms of what we are doing in the S part of ESG, we continue to play a significant part in the communities in which we operate. You have seen our corporate social responsibility activities in terms of our contribution to the cholera epidemic and helping the communities to fight the drought. One of the things that I didn't mention during the presentation is the fact that when I said that we need anything between 20 to 22 megawatts of power, the 2 megawatts of power that I'm talking about, above the 20 that we need, is actually used to pump water for the whole Masabuka community, which Zambia Sugar supplies to the whole community at its own cost.
Wow.
So we are continuing to contribute socially in terms of areas like improved housing, improved infrastructure. We've constructed a new road now, which makes it very safe for people to drive during the dry season, during the wet season, an all-weather road for people to use. We are also looking to see if there are opportunities to start market gardening projects around our estate so that we can create small enterprises which will help people to find some economic activities to engage in. So very active on the ESG front. On the governance side, we pride ourselves as a governance-driven organization. We are listed and we are part of two groups, the ABF Sugar Group and the Lovo Sugar Africa Group. And we are held to very high governance standards, and we continue to deliver on that front.
Absolutely. No, also, Magwenzi, thank you so much for speaking to us, and we look forward to engaging with you at full year. But are the media allowed to come and visit and see the technology at Nakambala?
You are most welcome.
Absolutely.
You must just arrange with our corporate affairs team, and you will be happy to host you.
Absolutely, yes. Absolutely. Ladies and gentlemen, you've heard it from yourself, the CEO of Zambia Sugar, Oswald Magwenzi, at the end of the presentation of the half-year results for 2024. Stay tuned for more insights and get to know.
Just to give some highlights in terms of the performance, some of the key business performance drivers. Like Oz earlier mentioned, we had seen a 14% increase in terms of our production. That was largely driven by the increase that we had in terms of cane supply, which was about 8%. And the key drivers for that increase in terms of the cane supply is largely on account of the improvement that we had in yields, given that we had better climatic conditions during the summer growing period of the cane, as well as also availability of power at that time for us to be able to do our irrigation. And so that accounts really for the increase that we had in the yields, both on the estate as well as from our outgrowers. If you look at production, as much as yes, there was that increment, but in terms of refined sugar, we're basically at par with just a slight nosedive, but relatively flat. Converting to sales from the commercial space, you notice that we had almost a 30,000 tons uplift in our sales. And much of that, you notice that is actually going to our domestic market. So we had significant increase in terms of the demand domestically. Part of it was driven by one, obviously the activities that Chamber and his team are doing within the commercial space to ensure that we continue to maintain our brand equity. But also we had seen a significant reduction in terms of the illegal imports coming out of the region, such that even the uplift from the border areas had significantly improved. So that accounted for the 36,000 tonnage increase in terms of our domestic sales. When you look at the export, there we had a dip of about 6,000 tons. That obviously is on account of the significant increase that we had on the domestic. So we sold actually much domestically, and obviously being a strategic and very important market for us. So we had to make sure that we satisfy the local demand, and that is why you're seeing. Speaking as an accountant, I would rather have had the opposite actually because of what was happening with the exchange rate. But given how important the domestic market is, we definitely had to make that sacrifice. Otherwise, I would have recorded even more profit for this half year. In terms of now what that translates to in terms of numbers, we had almost $1 billion, about 918 million increase in terms of our revenue compared to last year, the same period, and that converting into a bottom line of about $1 billion, which is almost slightly over 100% if you look at what we did in the previous year. So now just to speak to the specifics now, in terms of revenue, the key drivers, I think there's been something that has been circulating showing prices. So here, I think, just to get it clear, in terms of where this significant growth in terms of revenue is coming from, if you notice there, much of that drive is actually coming from the domestic volumes. So you notice that almost 70% of the 918 uplift in terms of revenue is actually coming from that increase, the 36,000 tons that we had in terms of the domestic sales. And domestic price there, just when you're accounting for just a poultry, 196 million kwacha. If you look at the exports, like I mentioned, we had a dip of about 6,000 tons. So that explains why we are seeing a dip there of 121 million. But from a price, like Oz mentioned, obviously on the export market, we are price takers. So we actually slightly benefited from a slight increase in terms of the global market forces driven export prices there. And given where our exchange rate has been, I think the graph was earlier shown, now in the highs of somewhere around mid-20s in terms of the exchange rate. So we also had that benefit in terms of the export proceeds realization by about 189 million. So really this is what accounts for the 39% increase that we've had in terms of our sales revenue.
How are you feeling after your first presentation for Zambia Sugar?
Yeah, very good actually, given the wonderful results that we just announced.
Absolutely.
I think it's a very good feeling.
Absolutely, and you did mention that obviously you kind of like walked into, where a safe landing, where the numbers were great. But just to get into the numbers, overall performance, you have recorded quite a significant growth in revenue at half year. Tell us a little bit about some of the drivers that you saw in the numbers that led to this growth.
So the key driver is actually coming from our domestic market, where we had about 36,000 tons in terms of additional sales domestically. So if you actually analyze where that is coming from, much of it obviously is coming from our deliberate efforts for us to ensure that that we push ourselves to all parts of the country, but also is the natural hedge that you get as a result of managed illegal imports. So because of the managed illegal imports, what we saw is that there was significant uplift that was coming even in border towns where previously those markets were flooded with the illegal imports.
Okay, so you would say that there's been some effort now to suppress those illegal?
Yes, but obviously also it's also coming from the impact of the depreciated kwacha. It makes the imports very expensive, so they are not competitive in the market. And that's why we continue. And obviously when you look at such, then it gives you additional impetus for you to do some advocacy with the government, where you can plainly show to them the significant impact that you get, the significant growth that you get domestically once you are able to manage the illegal imports.
Now, when you look at quantum, and we're still on revenue, when you look at the quantum, you're saying that the bulk of the revenue came from domestic and then less on export. What were the sort of percentages between the two?
So if you check actually on the domestic market, like I mentioned, we increased our sales on the domestic market by about 36,000 tons of sugar. But on the export side, we actually dropped by 6,000 tons. Why? Because of the same increase in the domestic demand. So we had to reallocate what could have meant for the export market for us to be able to supply in the domestic market because of that significant growth as a result of curtailed illegal imports, as well as also our efforts for us to increase our sales.
So that means that there still lies a huge opportunity, because obviously the CEO did mention that the plant is still not up to maximum capacity. Is there an opportunity on the domestic market to further grow?
Definitely there is. If you check, actually, if you check the domestic market, what you are going to find is that the demand continues to grow, obviously also as the population grows, but also from a regional point of view, you notice, like come from mentioning, that we had to actually curtail how much we export because of the growth in the domestic market. So again, it actually means that there are further opportunities that you have on the regional market, which we are able to supply. And I think from the projections that we have, the expectation is that that demand will grow to over 800,000 tons. And currently our installed capacity is just about 445, 450,000. So we actually need to almost double. Our current production for us to be able to meet that demand in the long term.
Okay, so now when you're talking about doubling, I'm just thinking about double-digit inflation and the various macroeconomic indicators. Just recently, the central bank had further increased the MPC. What are those macro issues and how are they impacting the business?
So if you look at our operations, we have quite a number of things that we have to import because obviously our equipment is specialized, and so we've got quite a significant portion of foreign currency denominated costs. And so that naturally requires that we need to also have some revenue for us to create a natural hedge. And so the export market then becomes important. But now where you are seeing growth in the domestic market, like the way we have now, then you now sort of reallocate from exports into the domestic. So you create some sort of pressure point for you in terms of your foreign currency management. And so where you have the exchange rate also is obviously, we have seen Kwacha struggle against the major convertibles. That means the costs are going up, but on the other side, in terms of your exports, again, you are not exporting as much. Correct. So those are some of the dynamics that comes to play, and that definitely you feel the pinch from a business point of view.
Right. Now, when we looked at the numbers, you did mention issues around overdraft, but then again, I think you kind of cracked a joke when it came to the loan side. We know previously, I think, Zambia Sugar has obviously suppressed its appetite for loans. How are you going to be financing the business going forward?
So if you look at the projects, for example, that we talked about, massive projects that we have, the Twazabuka, the Evaporator project, all those projects are actually meant to build and improve on our current capability from a production point of view. But again, we are being careful in terms of what kind of projects that we engage in. We are engaging in projects that are meant to bring back value. So if you look on average, those projects that we talked about, the internal rate of return is around 40%, and the payback period is just around 4 years.
Exactly, yes.
So you ramp up production, but within 4 years you're able to recoup your investment, and all that then now directly goes to your bottom line in terms of improving your operation. So indeed, the prospects for the future are quite great.
Now, obviously, many will be getting very excited about the D word, the dividend word. With the current trajectory that we're going, and Zambia Sugar has consistently paid a dividend over the last couple of years. Not to say that, we're kind of predicting. Do we see shareholders seeing continued growth in value?
Of course, the shareholders are the owners of the business, so we need to still continue to keep them happy. However, we still need a balance, because if we take everything to the shareholders, then again we're stifling the business. Correct. Because we still need to reinvest to make sure that we're able to build a sustainable operation. And so we'll continue to strike that balance, and we've got a very clear dividend policy, and we'll make sure that we stick to our dividend policy, because that's our commitment to the shareholders, and that is how we gain their confidence that indeed we're running the business profitably.
Absolutely. Hezron, it's been such a pleasure talking to you, and all the best in the next half of the year, and we look forward to engaging with you at full year.
Thank you so much. Yes, sir.
There you've heard it for himself. The person behind the numbers at Zambia Sugar, Mr. Hezron, has just spoken to us, and find out more about the other statements that will be coming on the Financial Insight platform. Get to know.